Good evening, everyone. Thank you for joining the New York City Public Advocate Jemine D. Williams Virtual Property Tax Exemption Informational Session. My name is Norris Johns, the Queensborough Advocate here at the office. We are excited to bring this important and time-sensitive information to you. This evening, you'll hear from the New York City Public Advocate Jemine D. Williams and from the Deputy Director, Mikhail Marshall from the New York City Department of Finance. We ask that you place your questions in the chat, and if we don't get to them this evening, please feel free to email them to me at njohns@advocate.nyc.gov. I will do my best to have all questions answered in a timely manner. So at this time, we're going to jump right in and have Department Mikhail Marshall from Department of Finance to start the presentation that you all are here to view. Mikhail, you can jump right in whenever you're ready.
Thank you. Good afternoon, everyone. My name is Mikhail Marshall from the New York City Department of Finance. And thank you all for being here with us this evening as we discuss property taxes. The focus tonight is to give a general sense of ways you can save and what your rights are in terms of challenging for your property taxes. So we'd like to thank the Public Advocate's Office for inviting us to present to you tonight. Okay.
Thank you. And as a reminder to folks who've joined us on Zoom or on social media, you can drop your questions in the chat box or in the comment section. And after the presentation, those will be addressed.
Okay. And folks, can we confirm that everyone can see my screen that I'm sharing now?
Yes, we can see it.
Okay, perfect. Thank you. Just a quick note in addition to the questions. Keep in mind that we are in a public space, so while many of your questions will obviously be near and dear to you, we kindly ask that you refrain from sharing any personally identifying information. Okay? Okay. So, what is the NOPV? So every year, the New York City Department of Finance, we mail out what's called the Notice of Property Value to homeowners. This is in the form of a 4-page document, and folks usually receive it mid to end of January. And essentially what it is indicating what your projections for taxes are going to be for the upcoming tax year. Now, this document is primarily mailed to homeowners, 1 to 3 family units, as well as to condominium owners, not necessarily to co-op owners. And that has to do with the way the co-op is structured, where you are a shareholder of the property. Now, this is the document, the NOPV, right? And you can see here it details the market value, the assessed value, and it also denotes what exemptions may be applied to the property for the taxes. In addition to that, you will see a detail on how taxes are calculated, as well as descriptive information of the property. And finally, we post our NOPV events where we attend borough-wide. We attend each borough where we have assessors. We also get partnered with the New York City Tax Commission, which is a separate agency, as well as the Office of the Taxpayer Advocate or assessors and folks from our exemptions unit who all come to these events to assist you with the property taxes. So a few key things here would be how your taxes are calculated. And so for the purposes of following along here, I'm going to be going back and forth between these 2 slides here. Now, the first thing you're looking at is your market value. And the way we look at market value is we look at comparable sales of similar buildings in your neighborhood. All right. Then additionally, we look at your assessed value, and the assessed value is the main piece here in calculating your taxes. So I'm going to go back here and looking at this property where we're looking at the market value at 950,000. Now, the effective market value, however, is really the number that we're using to calculate your property tax here. This is effectively what you're paying taxes on. And so the effective market value would be 6% of the assessed value here. And that then gets multiplied by the tax rate, which is passed by New York City Council in the fall, right? And so you'll find on your notice of property value, here it will say this taxable value multiplied by the tax rate. Of course, if there are any exemptions or abatements to be removed from the calculation of your assessed value, we will do that before applying that to the tax rate. Okay, and that's in a nutshell how 1 to 3 families are generally calculated. A few points regarding that. So in New York City, we're not allowed to go up more than 6% year over year on your assessed value. And in addition to that, we do not exceed 20% over a 5-year period. So if for folks who may experience that their taxes, their assessed value has increased, 6%, 6%, 6%, the thinking is then over the next 2 years, there should be some leveling out because we'd be approaching that 20% mark. And so that helps homeowners with being somewhat shielded from some of the inflationary components. If your property value goes up too much, that 6% helps to stave off some of those significant shocks, right? And so for a lot of times folks want to know, well, how do I challenge my property taxes? Either they think that we have some descriptive information that we may have gotten wrong, or they find comparables in the area that they believe better reflect the true value of their homes. You can do that by going online, and later on I'll add these links as well to the chat, but you can visit our property information portal, and there's a link there that says that you can use to challenge your assessment, right? And so the main ways though is it's through the market value, your assessed value, or if we have a descriptive error. Now, all New York City property owners have a right to challenge this information, and you can do that through the Department of Finance or through the New York City Tax Commission, and they're a separate and independent agency with their with independent oversight to review the determinations and calculations which we've made. Okay, so a few key things here is if there's an issue regarding the market value, right? Now, this has a deadline, and this deadline for this year is March 16th. For tax class 1 properties. Tax class 2 properties and tax class 4 properties have until April 1st. And if you're not sure, a tax class 1 property is a residential unit with 1 to 3 family homes on the property. Tax class 2 properties are 4 to 10 units, and tax class 4 properties are larger properties. So for the 1 to 3 residential homeowners, you have until this Monday to file that. And then for larger properties, you would have until April 1st. Now, if there is a descriptive or information error, that is done year-round on a rolling basis. Similarly, if there are any administrative or clerical in terms of the calculation component, that can also be done on a year-round basis. Now, the next big way of reducing your taxes would be through exemptions and abatements, right? So the way this works is exemptions reduce your assessed value before your taxes are calculated. So if you recall earlier on the on the breakdown, you would see your effective market value, which then would lead to your assessed value. And then afterward, right? Afterward, we would remove any exemptions. Not too dissimilar would be abatements, which is done by after we calculate your taxes. Then we remove the abatement, but essentially you're getting your savings. And I'm going to go over what the different exemptions are being offered by New York City for property owners at this point. Okay. So in terms of exemptions, the city offers savings to seniors, those who may be disabled homeowners, veterans, members of the clergy, and disabled crime victims or Good Samaritans. In terms of the seniors and disabled homeowner exemptions, you can't get both of these together. So generally, if you get one or the other, and the way it works is for seniors, you'd have to be 65 years old or older. All homeowners would need to be seniors, unless one of the homeowners are siblings or they are spouses. So in other words, if one partner is 60 and the other partner is 65, you're eligible to apply. However, if it is a parent and child who are homeowners or two friends who are homeowners, both people would need to meet the age requirement. Additionally, all homeowners will need to provide, and their spouses will need to provide income, and the income limit is $58,399. Or current way of calculating income, we've improved it to be your adjusted gross income. So typically for filers, that would be line 11 on your taxes. And then you can subtract any annuities in case that leads to you being over. So if you're having annuities or IRAs, you can deduct that from your adjusted gross income. And that has helped to increase the availability pool. The benefit of the seniors homeowner exemption is that you can receive anywhere from 5% to as much as 50% off of the assessed value, which relatively could bring you down to a 50% reduction in the property taxes. In terms of the disabled homeowner exemption, in order to receive this exemption, one would need to provide proof of disability, and that would be in the form of SSI, so Social Security Insurance, New York State disability, or the Veterans Disability. And similarly, all homeowners would need to be disabled unless the dynamic is also between a spouse and or sibling. The income limit is also the same at $58,399 for all the homeowners, as well as the savings component also range between 5 and 50%. As a general rule of thumb, if someone is receiving or is eligible for disabled homeowners exemption, once they become of age to receive the senior citizens homeowner exemption, we would encourage you to transfer to that. And the reason for that is the senior citizens homeowner exemption only need to be renewed every 2 years, compared to the disabled homeowners exemption, which would need to be renewed annually. The other benefit, now the first two, as I mentioned, you cannot combine. However, you can combine either of those exemptions with the exemptions I'm about to mention. And the next big savings would be with the veterans exemptions. Now, with the veterans exemptions, one would need to have served active duty, and this could be at any point from 1914 on. And the big benefit of that is this year, the city has included the Cold War period to the previous periods of conflict. And with that addition, it's effective that once you've served between from World War I to present, one would be eligible for the veterans exemption. The additional savings can be obtained as well for veterans who were disabled during their service and or for veterans who were in combat. The disabled crime victim exemption is less popular, but it is there for those who may have been injured either as victims of a crime and or while rendering assistance to stopping a crime. This is not extended to first responders at the moment, but that is a way for someone to reduce their taxes. And the way that works is the city will give you a tax exemption at a proportion of the cost to upgrade your home to becoming more accessible. And finally, for members of the clergy, you can receive a $256 a year exemption for that service. You would need to provide additional documentation from your house of worship to the Department of Finance, and you would receive that benefit. Applications for these programs. The deadline is on the 16th as well. Folks will need to submit the applications before the Monday deadline. If you are still doing it by mail, it needs to be postmarked by March 16th. Our website will also be open and available to those who are able to submit online. It is important to review the eligibility requirements and answer the questions as succinctly as possible. This helps to expedite processing of the application and reduces the opportunity of you getting denied. We've made some changes. We're trying to make this an easier process for New Yorkers. And so one of the few of the things that we've done is we have now removed the requirement to provide a copy of your most recent tax returns when filing for renewals, provided that the applicant has filed with New York State. You'll be able to simply just submit the application, and that's it. The other benefit also is you no longer need to provide us the entire copy of a trust or a life estate. We acknowledge that for some folks that sometimes became a bit burdensome. So what we've done is we've introduced a new trust or life estate certification form, and that's only 2 pages. So you fill that out, add it to your application, and we'll review the documents. If there's additional need for follow-up, we will do so. But for most folks, this has been a great way to reduce paper usage as well as just making it a lot easier. The other major update is for the STAR and Enhanced STAR program. So earlier I mentioned abatements. Now, the most common abatement is the school tax abatement or the STAR program. This is eligible for open for New Yorkers who are homeowners whose income is under $250,000 a year. Now you would have to apply with New York State. Additionally, for seniors whose income is below $110,000 for the year, you are eligible for an additional saving in the Enhanced STAR, where you would get back a much larger amount back on that school tax abatement. The New York City Department of Finance is no longer accepting new applicants. Existing applicants will still see this benefit on your notice of property value. But if there are changes to be made, or if you're trying to upgrade from the STAR to the Enhanced STAR, you would need to call or contact the New York State Department of Taxation and Finance. they are now overseeing the program. So I will then open up the floor to any questions that anyone may have. And thank you all for coming out. And thank you again to the Public Advocate's Office for inviting us.
Yes, thank you, Mikhail. So first, I just want to say thank you and to the Department of Finance for partnering with us on Monday at the Southern Queens Park Association, where members of the community were able to receive this important information, but also apply for their exemptions, speak with property tax assessors, and have their questions answered by the Department of Finance team. So, as you mentioned, we're going to go into questions. First, we had some questions emailed directly to the office prior to the event this evening. So I'm going to just start with those questions first. So the first question is, can property owners be entitled to more than one type of exemption? For example, senior exemption and solar energy tax abatement. How much reduction can the property owner get?
Yes. So going back, you are able to receive multiple. Now, when you start getting into the solar piece, I mean, that you can have solar and seniors. The only ones that you can't combine are seniors and disabled. So if you're talking max circumstance, if you have a senior whose income is below $50,000 and they were a veteran who got injured during Vietnam, and they're now the pastor of their church, they are eligible for all of those combined. So you're talking about the 50% from the seniors homeowner exemption. The veterans exemption would be applied, plus the combat, plus the disabled veteran, plus the clergy. All of those would be applied. And then, of course, the solar, which operates through the department, you would have to file for that through the Department of Buildings, who then notifies DOF. You'd then be able to get back a percentage of the construction costs on that. And that is subject to when the construction was done. So there's a lot more variability around the discount that you would receive. It would be subject to the cost of construction as well as when the construction was done. But to answer the question more succinctly, yes, you can combine, and we encourage folks to combine as many as possible. And also that includes the benefits as well from the STAR program. So you're talking about somebody could be reducing their property tax bill by like 70, 80%, if not, so yes.
Thank you. So everybody could just pile on the exemptions.
Yeah,
perfect.
Pile it on. Get everything that you deserve, right? If it's there for you, you take it.
All right. All right. So the next question is, can a property that is in a trust get any property tax exemptions?
Yes. So trusts and life estate deeds, certain willed properties can also get these property tax exemptions. The only thing that we require is that you provide us you complete the trust/life estate certification form. In some instances, we may follow up and ask for a copy of that document in case there are, certain terms or some of the more technical pieces that need to get reviewed. But absolutely, folks with a trust or life estate are encouraged to apply.
Thank you. Another question that I have here is, what happens if someone's application applies after the March 16th deadline?
If you apply after the deadline, your application would be reviewed for the upcoming tax year. For the following, the deadline's statutory, so you'd just be like rolled over to the next year. I will say, if anybody is also denied, they do have a right to appeal, or denial notices also detail how one can appeal that the decision that they had.
Okay, thank you. So I do see a couple hands raised. We just asked if you could just put your question in the chat, and then we'll read the questions from the chat room. Thank you, everyone. So a question from the chat: as a shareholder in a co-op, how would I get such info in challenging property tax value if this doesn't apply to co-ops?
Okay, so we're gonna parse out co-ops piece, and thank you for all the questions, but especially for bringing up the co-op component. Now, for co-ops, in terms of challenging your property tax, given that this is done as a building, a lot of co-ops, this would have to be through your managing agent, right? Because you're essentially pooling together behind that managing agent to serve as a representative on behalf of you as shareholders, right? It's not about the individual units per se, right? So that piece would have to be done by the managing agent. However, you are still able to apply for tax exemptions and abatement programs. This would then be detailed upon approval. Of course, we will notify your managing agent, and in what we call a breakdown report, where we detail what unit is getting what program and what the taxable value of that is. And the managing agent and the individual co-ops will figure out how they disperse that, but you are entitled to that. But yeah, for challenging the assessments, that would be through the managing agent.
All right, thank you. Another question is Shay and Star the same exemption?
No, they're not. And actually, one's an exemption, one's an abatement. So the senior citizens homeowner exemption is for anyone over 65, but the income limit is significantly different than with the Star. So there's Star and then there's enhanced Star. So generally, if you are eligible for the seniors homeowner exemption, you're also eligible for the Star. So that it's almost like an automatic combination once you apply for both, because the income limit for the senior citizens is $58,399, while the income limit for the enhanced Star, especially for seniors, is $110,000. So if you fall into the category of being able to qualify for seniors, you then have the opportunity to get the additional benefit of the enhanced Star. There's also just basic Star, which is for any homeowner, any homeowner, and the income requirement, I believe, is $250. The state may have an even wider allowance, so we encourage folks to reach out to New York State, because for them it may be even more. And the way the state does it is, instead of you seeing it on your taxes, you'll get a check annually in the amount of the benefit.
Thank you, Mikkel. We have been joined by our New York City Public Advocate, Jemine D. Williams. Thank you for your time and dedication for bringing light to the exemptions available to your constituents. I would like to give the floor to you so you can give remarks for this evening.
Thank you. Can you hear me?
Yes, we can hear you.
All right. Peace and blessing, love and light to everyone. First, I apologize I can't join you on camera. I was really hoping I can, but I wanted to make sure I said a few words. Thank you, Norris, and the entire team. Thank you, Department of Finance and the admin, for working with us to put this together, because I know we had a lot of folks who were concerned and want to get this information, so I'm very thankful. First, I just want to make sure I speak about something I know that's on homeowners' minds, which is the tax increase that's been proposed during the budget negotiations, and I want to make sure people understand what it is and what it is not. So first of all, I don't support any tax increase on homeowners, particularly before we do any reforms. But I know a lot of people were alarmed when they heard the number 9.75, and they thought if their taxes were 10%, it was going to go to 20%. I just want to make sure people understood what that actually meant. 10% of 10 is 1. So in that scenario, it would actually go from a 10 to 11, and that will be a 10% increase, not 10 to 20. I think the way it was discussed left people confused. So if your tax is 10, it will go to 11, not to 20. So I just want to make sure that was clear, so these people understood that. But either way, I don't support the increase, because I don't think the homeowners can really sustain that right now, particularly about the reforms of who's taxed the most and who's not in this city. So pushing back against that. And I want to make sure that if you can get some money, you get them. And so hopefully you got this information, and I would love to hear in the future that people actually got some exemptions and some money back. If you didn't, it would be great if you can pass this information on to your neighbors, whether it applies to you or not. So I know there's a lot of folks who wish they had this information. So thank you again. I really appreciate you all. Please pass this information on to your neighbors throughout New York City so they can have the information as well. Thank you, everybody. Appreciate you. Have an awesome weekend.
Thank you, Public Advocate, for your remarks. And we will go back to answering the questions in the chat room. So as mentioned before, I do see a couple hands raised. I know you have some questions, so we would love to answer them, but we just need you to put those questions in the chat box. Another question we have here. I was approved for the disabled homeowners exemption in 2024, but last year my renewal application kept getting denied due to my older sibling co-owner who does not live at the resident as a primary residence. However, the supervisor that submitted my initial application in 2024 said that the non-disabled co-owner need not live in the resident as primary resident. With my disability and how difficult it is to get to the DOF office, I had to go in over 20 times to rectify this, but the Department of Finance at 66 John Street, third floor, was not aware of the fact that non-disabled co-owners do not need to live at the resident as a primary residence. Can this be clearly told to all workers at Department of Finance and also stated on the brochure, the website, and disabled homeowner exemption information sheet?
Well, first of all,
yeah. Oh no, go ahead, Nicole. Go ahead.
Yeah. Well, thank you for your feedback, and I'm sorry to hear that you're having a bad experience. I mean, I believe we spoke with this particular constituent at a recent event, and one of the things is the Department of Finance has off-ramps through our Office of the Taxpayer Advocate, as well as homeowners have a right to appeal any decision that we make. And as mentioned, the appeals are submitted and reviewed by the New York City Tax Commission, which is a separate agency, and they have the authority to to correct any mistake that may have happened with us. To be clear, that it's not that the primary resident, and I don't want to speak too much without I'm just going to make a broad statement regarding the residency requirement. It's not necessarily about the primary residency requirement of all the homeowners, but all homeowners would still also need to provide income documents, irrespective of where they live, right? The way it's written, it's that all homeowners must provide income. And so, yes, you may check that they're not living there, but all homeowners would also need to provide income as well.
Okay, thank you. Next question. Are management companies for co-ops allowed to stagger the payments for star exemptions to shareholders if shareholders receive the money as a credit towards their maintenance payments?
You know what? I can't speak to that directly. I know, like, this is where the co-ops piece gets a bit, as far as the agency's standpoint is we create the allotment. Now, it's hard to speak broadly on how co-ops operate. Some of that may just be a timing issue of, so that would have to be something discussed internally with the co-op members as well as the boards, because they're all, these different bylaws and different objectives. So it's hard to make a general statement regarding all co-ops. But we do issue the credit to the specific units, right?
Okay, thank you. Next question. This is a separate question. Would we be able to have a session for non-English speakers? I'm a community organizer, health tech founder, and healthcare advocate from Queens. Great to collab with you all for how to distribute this material for more people across New York City.
Yes, absolutely. And the Department of Finance also has materials or websites, have several of the largest spoken languages in the city. That has been a consistent focus and goal of ours to make sure that we have this information readily available for all New Yorkers. We're more than happy to connect to further that discussion.
Okay. And also I gave my email at the beginning of the informational session. So if you want, you can email me njohns@advocate.nyc.gov. And we could figure out how to collaborate. So all right, next question. The assessed value of my home during 2026 and 27 is higher, even though market value is lower. Why is that?
Okay. The assessed value in many instances, so if I call on the example that we showed earlier, where we talked about the market value versus the effective market value, where the market value is $950 versus another being $750,000 respectively. Because there are these caps on the assessed value, on the effective market value, right, and effectively the assessed value, you may experience times where there is some contraction in your market value, but because there's an the effective market value is much less than that actual market value. The effective market value is still trying to get caught up to the actual value of the home. So for many homeowners, you'll experience where there's a big gap between, say your effective market value and the market value. So in that particular example, you were talking about $200,000 being exempt from any tax calculations. Now, when they get a little closer, we can start, you start looking at, well, is this really the value of the home, right? So if your effective market value, in other words, which is a number that you're effectively being taxed at, you think that there is a discrepancy there in that being the value of the home, then, we encourage that you apply for a request for review. And in general, you have the right to do so before the deadline. But that is essentially why you would see increases in your assessed value going up, even though there may be some regressions in that market value.
Okay, thank you. The final, I see about 3 more questions. We submitted an appeal after our exemption was denied. When should we expect to receive notification or instructions regarding the next steps in the appeal process?
So yeah, in the spirit of that fairness, I mean, you would have to, again, it goes through a separate agency that's independent of us. So, you would have to reach out to the New York City Tax Commission for clarity on that. That's just, that's as simple as I can put it, really.
Okay. All right. If a homeowner passes away in the same year that an abatement or exemption would be due, and the passing is before the money is issued, could the savings be applied to the estate?
That one is very case specific, right? If you're trying to maintain a benefit, it's not just going to the estate. I understand the trust component that's being implied here, but if in that trust there is succession allowances for someone who maintains eligibility, then it's possible that could happen. But if you're saying that the trust owns the property, then that won't be the case. So in other words, if mom or the senior who is 90 passes, and then the person, the beneficiary, is 50, you're not entitled to that simply because it's in a trust.
Thank you. So I believe that is all the questions for this evening. I just want to give a minute so people could put their final questions in, and then if not, we will wrap up for this evening. So I think it was a follow-up to the question you just asked. It says, does the money have to be returned?
Yes. So in that instance, homeowners are expected to file a removal of a property tax exemption form. If you continue to receive the benefit and we are notified, you may face reversal of those benefits on the property. So if someone passes and you are, it's always best to just reach out to us, right? We'll give you clarity on how to either transfer it if you are eligible, and if not, then you'll have to file to remove it. In some instances too, you may have a gap year to adjust eligibility, but overall, yes, you will need to notify us to be on the safe side.
Okay, and another question, will there be another session like this online or in person?
So what I will say is, well, given that the deadline's Monday, we later in the year, there's usually a gap, right? So as either policy decisions get updated, so on and so forth. So there will be a bit of a cooling off period on some of the topics for in the very near term. Later, towards the end of the summer and in the fall, we'll definitely be doing more of these sessions. And especially when you receive those notice of property values, I get the temptation of, this is not a bill. Why is DOF sending me a letter that it's not a bill? Please check out the dates for the notice of property value. Reach out to the public advocate's office. They were great to invite us not once, but twice. So, we partner with your local elected officials as well to host additional sessions. So yeah, keep the connective tissue going with the offices, and also review the notices we send, because they'll have the dates for when we have these sessions.
All right. Thank you, Mikhail. So thank you everyone for joining us this evening. If you have additional questions, please feel free to reach out to me at njohns@advocate.nyc.gov, or you can reach out to the office email at gethelp@advocate.nyc.gov. Have a great weekend.
Thank you.